Let's talk about investing. Hello and welcome back to another video. I'm your beautiful host, Young Buffett, and in today's video, we're going to talk about all things money. We're going to talk about some investing strategies. We're going to talk about how to get your money to grow. We're going to talk about the best places to put your money for the safest and most solid return on investment. First and foremost, nothing in this video is financial advice or a recommendation to buy or sell any type of security or investment or asset or do anything. I'm just talking to you one-on-one. It's just me and you in a room having a casual conversation about stocks and money. I am not telling you to do anything. I am not telling you to buy anything. I'm not selling anything. I'm just talking to you about how the hell did I manage to do something like this. So, real quick, if you're unaware, investing is super easy. I'm just going to say it like that. You can literally invest in anything that you want and you'll most likely be fine. And I know it's weird to hear that because a lot of people, they just assume investing is a bunch of charts and graphs and you have to know some technical analysis and understand, oh, is this going to go up or down? And you have to draw lines and conclusions and this and that. No, I'm telling you, if you like watching Netflix, why not throw some money at Netflix? So this is my public app. I made a public facing portfolio for you guys. I made it for a TikTok challenge a long time ago, and I wanted to show the power of investing slowly and steadily and consistently and small. So this account consists of about $100 per paycheck. And I always say anywhere from 10 to 20% of a paycheck makes sense to put away, to save. I have multiple accounts that I deposit money into, so I thought I can start with $100 per paycheck from my job, like most other people have jobs. If you're watching this video and you have a job, you can do something very similar to this. But I started this portfolio, and each one of these spikes that you see right here is a deposit. And essentially, it's like a staircase up and up and up and up. So let me just walk through my portfolio just so you have a good understanding of what kind of stocks I like to buy and why. So first off, you see I have Netflix. So I believe this is organized based off of the biggest profit percentage, but Netflix, first off, click on it right there. I have about $6.88 invested into it. You don't need, what is Netflix at? $639 to buy a whole share. You can scale into it over time. So over time, every time I get a paycheck, I'll take a look at this and see if I want to invest more or if I want to just keep it as is, and I can go from there. So I bought Netflix because I was watching Netflix one day and I'm like, you know what? If I'm paying this much for a monthly subscription, I might as well also own the company. AMC, I've also invested a lot into AMC. I have about $39 into there. I invested into AMC because I know the company. I know where AMCs are. When I want to go see a movie, I go to AMC. Not only that, but on top of all of that, there is also that whole short squeeze potential, and it's a meme stock and all of this. So it does have that social hype around it, just in case something decides to pop off. I have $39 in there, and we'll see what happens. But again, I'm not over invested into it. Next up, I have Snapchat. I like Snapchat. I use Snapchat. I like their geo filters. I like taking a look at what's going on in the world. I know a lot of the younger audience, they still use it to communicate with each other. It's a messaging app. I have $27 in there. So nothing crazy, but still I'm putting away this money to work for me instead of having it just sitting in a bank account. So why isn't this moving? There we go. Then we got Disney. Same concept as Netflix, except it has an added benefit of the actual Disneyland. So one day I was watching Disney Plus. My wife and I were watching Sweet Life of Zach and Cody, or That's So Raven, things that we used to watch growing up, and just we would fall asleep watching those shows. But we're paying every month for Disney Plus. And on top of that, Disneyland, a reopening trade. This is a company that I know. This is a company that I think is going to continue to do what they're doing now, but better in 5 to 10 to 15 to 20 years. Disneyland and Disney Plus, the whole Disney franchise, they're not going anywhere. I have about $59 in there. So I like that for the long term. I'm just holding it. But as you can see, we're currently down 0.67%. So it's not working for us right now, but I'm actually fine with that because you know why? I have about $81 left of buying power. So I can now hop in there and buy some Disney if I choose to do so. Next up, I have some SPY. And I actually got this SPY for free for referring a friend to Public. So this app that I'm using, if you go to the comment section below, there's a link to sign up and you can get up to $50 worth of a stock. And from the people that I referred, I've gotten close to like $20 so far. So it's a win-win for all. It's an affiliate link. If you want to open up a Public account, use that link. You'll get up to $50 in free stocks. But we have SPY. It's a good ETF. I usually don't like ETFs. I can make a whole video about why I don't like ETFs, but think of this entire portfolio as my own ETF. Next up, we have Facebook. Facebook has been getting a lot of drama recently. A lot of people talking bad about their services. They had a recent downage. They're going through a lot. But I like Facebook. People still use Instagram. The older generation's actually diving into Facebook recently. So they have a lot of room to grow. They own Oculus. There's a lot to Facebook. I have about $60 in there. And if it's up, if it's down, we don't have to invest more and more into it if I don't want to. Next up, we have Coinbase. If I ever want to do anything crypto related, I just go on Coinbase. So again, I'm putting my money where my money gets put. So you see I have $10.40 in there, currently down 5.44%. So what does that mean? That means this is another thing that I can dollar cost average into. Every time Clove goes down, I get a little bit more excited because that means I can now scale in and buy coin at a cheaper price than I did originally. My dollar is stronger. Next up, we have Clove. If you've been a fan of this channel, you know that I am a fan of Clove. I think Clove is a highly manipulated stock that is very, very undervalued. I understand their business. They're in insurance. They're in Medicare. It's something legit that I really enjoy. Unfortunately, it's heavily manipulated and very, very shorted. So it is a tough stock to play. But again, I am down 5% on that. But still, I get to have an opportunity to scale in if I choose to. Rocket Mortgage is another stock that I love long-term. They spend so much money on marketing, mortgages. If I ever need another mortgage, I reach out to Rocket Mortgage. They give me some great rates. They have amazing customer service. Why not own the stock too? Again, I'm putting money places where I put my money. Tattooed Chef. That is another great company. But this is an example of a stock that I've just heard a lot about, and I just wanted to put a little feeler out there. I put like $3 in this. Nothing much, nothing crazy. I just threw a little bit down just so I have a place marker. And as you can see, I'm down 11% on that. So if I really needed something to average down into, this is a stock that I can average down into, down 11%. If I just throw in like another $10 or so, $15, and if Tattooed Chef starts to move back up to where it was previously, then we're in the green. Imagine if I had bought like $100 or $1,000 worth of Tattooed Chef, I would have been down a lot, and that would have been really upsetting. So that's why I like the strategy of dollar cost averaging. Next up, we have one of the worst ones that I own, Oatly, down 42.39% on it. But you know what's amazing? I only put in like $15 or so. So again, keeping it very small. This was a TikTok challenge stock, actually. A bunch of people told me to buy Oatly. So I said, okay, fine, I'll buy some Oatly. And this is what we were left with. down 42%. That is a lot for a stock. Usually you don't see stocks fall that hard, but Oatly's been having a very, very difficult time. So again, another opportunity. If I really like this stock, I can scale into it and just increase my position size and hopefully get out of that 42% down. Next up, we have Hood, which is everyone's not so favorite brokerage, Robinhood. We're currently up about 18.56% on this bad boy. Again, total holdings only $4.47 though. We're keeping it small. We're scaling in. I actually have a crazy trade on this one. Let's see, posts, my posts. So if I scroll down here, when Robinhood first IPO'd, they went absolutely nuts, and we were able to lock in a whopping 119% gain on this stock. So when it first IPO'd, it started going crazy. I actually made a video that talks about how I made 119% on Robinhood. But as you can see, if you just scale in small, you can just scale right back out just as small. So I still have some holdings in there. I used to use Robinhood, so I thought I'd also invest into it. Airbnb, same thing. I like the company. I like the concept. I think they're going to continue to do what they're doing now, but in the future, way better, more profitably. And I like Airbnb a lot. I have $41 in Airbnb, and we're currently up about 13.98% on them. I like the stock. I like it. I use it. I put my money into Airbnb, so why not also buy the company? You see, this is constantly repeated throughout my entire portfolio. Uber is my absolute favorite stock when it comes to something like this. With Uber, they're in so many different sectors, whether it's Uber Eats, whether it's freight deliveries, whether it's medical, whether it's rideshare. I think Uber is on a path for maximum profitability. I think they're probably going to take over the world soon, but that's just my opinion. I just really like Uber, so I have about $247 invested into this thing with a gain of 13%. But keep in mind, this is just my public portfolio. I have other portfolios too. This was just made to show you guys how you can start small and just keep on going. I have Google as well. I have like $3 in there with 39 cents of gain, but this stuff adds up over time. You just keep adding and adding and adding. 12%, almost 13% on Google, 3.82% on Apple. I use Apple all day long. I have 2 iPhones. I have an AirPod case right here where I listen to music, my Apple Watch. As you can tell, Apple is something that I use every single day. So why not also own the stock? It's just that simple. Same thing with Square. Square, I see it used all the time. Different restaurants use them. Different payment platforms use them. They're very easy to use. Why not put my money there too? About 3.17% on that. Then we have Iron Mountain, IRM. They have a lot of good benefits, a lot of great customers. They are a data management company. They work with massive companies, for example, like Walgreens, and they manage all of their security and securely shredding documents, for example. So they work with a lot of great people. They work with a lot of great people that I like. So they also pay a really good dividend. That's why I have about $10 in there. We're just holding that for the long term, and it'll just slowly keep on growing. We have about 1% gain on that. Next, we have Amazon. I buy literally everything from Amazon, but this year, Amazon literally hasn't even moved. So their stock price has been very stagnant. We're stuck at about 1.28 negative return on that, but that's fine. I just keep adding to it over time. We have about $30 in there. Remember, from this paycheck, I have $100. I have like $80 left. Maybe I buy some Amazon. Who knows? Then we have Starbucks. I started buying Starbucks every single time my wife and I went to Starbucks. So literally, I would grab a drink from Starbucks and also grab like $5 worth of shares. So overall, we're down 3%. But again, that does not matter. We just keep adding and adding and adding and adding and adding. Spotify, before I just turned on the camera to record this video, I was listening to music. And I got an ad. And the ad said, upgrade to Spotify Premium. So I said, no thanks. I'll just buy the stock instead. So I have about $76 in there. Maybe I instead of spending $9 on Spotify Premium, I spend $9 buying the stock instead, because why not? Why not just own the company that you like and use? Altria. They make cigarettes. They make vapes, highly addictive substances. They are probably not a good moral stock to buy, but they have a lot of dividends and they usually perform pretty well. So this is a great stock, in my opinion, for something long-term to put away. I'm currently down 4.93% on it. But again, we only have $14 in there. That's another great opportunity to scale in and get a better price than dollar cost average. And last but not least, AT&T. So AT&T, one of my favorite dividend stocks. They are just so consistent. And I use AT&T for my cell phone provider. They pay a great dividend. So if you just keep growing this and growing this, maybe one day they'll pay for my phone bill. But as you can see, it just keeps on going up. A lot of people want their portfolios to look like something like this. So what do? It's all about consistency. It's all about growing over time. It's all about just sticking to a plan. And our plan is keeping it small, slowly adding and stacking to all of our stocks that we're currently holding, and just seeing where it goes from there. Stocks are as hard or as easy as you want them to be. With that, I love you. Ask me anything in the comments below, and I'll catch you in the next video.